Assalamualaikum dan salam sejahtera. Welcome to XM Podcast, the show where market meets mind. I'm Zul Razak and today we continue our journey into the world of trading, not with charts or numbers, but with stories, strategies and raw real conversations. I'm joined by Ezekiel Chew, trader, investor, educator, market analyst, mentor. Mouthful. Okay, Ezekiel is the CEO of AsiaForexMentor.com. on his t-shirt that offers online trading courses to thousands of traders. Well, we'll be chatting about why survival should be your number one priority in 2026. A bit scripted there. Welcome to the show, Ezekiel. And survival, scary.
Hey.
What's happening?
What's happening, man?
Why surviving? Why survival?
I think 2026 is going to be an interesting
Exciting.
thrilling, lots of opportunities, lots of probably scary times for new, maybe not so experienced traders who haven't been through the rights, right? I mean, both of us has been through trading a long time, right?
Yeah.
I think I've been trading since I was 16. I think I'm 41 this year, so I've been trading 25 years. We see like all the big the dips, the rise, the dips, the rise. So we've kind of like weathered it all. And I think 2016 is going to be an exciting year. It's likely going to be a volatile year. Volatility is good in trading. Right?
You need price to move.
We need price to move. Like we don't want. I mean,
with the spread, you don't make money if price doesn't move. You lose money.
Exactly. They say the market is what 70% sideways, 30% trending, right? Most of the money are being made when the market is trending, right? And I think,
but you see, in reality, most of the money, most traders lose. Not just lose their money, lose their account when market is trending. So
most of the traders lose account when the market is trending. Yes, that's true as well. I think they lose irregardless, and they lose is also likely because they chase pricing, right? They're always trying to catch the lowest. This is the lowest low, I got to get in. This is the lowest low, I got to get in. And then they realize that the market keeps going lower. Or the market is running like, I got to get in now before the market keeps going up higher, right? And then the market pulls back. So even though, yes, you're right, even though when the market is trending, traders are going to get hit, which is why strategies come in, the system come in to get in at the right spot. I think 2026 is going to be a year whereby there's going to be big move. There are going to be a lot of fix in the market, I believe so, like every year itself. But all the more so, I think 2026 is going to be a year whereby, man, if done right, it can make you a lot of money. If done wrong, I think your account will go bust within the start of the year.
Exciting year 2026. Yeah. What's the outlook? What's the big thing? What crypto again? Stock market? What specific sector? I mean, what's the outlook?
What's the outlook? Yeah. So I trade a lot of things. Right. I started trading Forex. I expanded into commodities. Expanded into stocks, and then crypto came in, right? Expanded into crypto, right?
All of us the same.
it's like, and then along the way I realized that I could actually use the same trading style for all of these markets itself.
True.
And it's about understanding a little bit more about the characteristics of each of the different vehicles, right? So I think Forex is going to be like 24/7, right? 24/5, which is
now worse. Crypto 24/7.
Crypto is 24/7. So crypto is really defined by the markets itself. I trade crypto. I will not have, I hold crypto, but I will not say that I'm biased against crypto. I'm always keeping an open mind, right? When is the next move? I started crypto in the early days and till now, right? So I believe crypto is going to be an interesting year this year. I do believe that a lot of money is going to be made this year as well. But again, we got to be careful. Stocks is going to be a volatile year, for sure, with the increasing tensions.
Everywhere. Not just even our neighbor now. Yeah, everywhere.
Yeah. Commodities. I wouldn't say I have great expertise over there, but I trade the technicals. So in and out, I think that's fine. Forex trading, I think, is an everyday thing, so it doesn't really matter. So, but overall outlook. The US is going to affect what? The USD, right? The USD is going to affect gold. USD is going to affect the stock market, right? Stock market is going to affect the crypto market. So it's all interchange, which is why I think 2026 is whereby it's like, hey, we got to put ourselves mindset wise into the right mode. Like, hey, this year is going to be a volatile year. This year is also going to be a year of opportunities. I think that once we set the mind frame right, we can not only survive 2026 because it's going to be very volatile, but I think when done right, we can actually find a lot of good opportunities in 2026.
It's all about the start. Quarter one. What are you looking at for quarter one 2026? To start right, what do you do? What do I need to do?
I think it's mindset. Like every year, it's about reset of the mind, right? Like when you first start to trade, you are all anxious, right? You want to find the best trades and this and then you don't really care about
Perfect setup.
the
Perfect technique. Yeah.
Yeah, the perfect setup.
We've been there.
The best strategy is the holy grail.
Yeah.
And then we see a tip online, and then we saw somebody sending a signal and this and that, right? But I think every start of the year, what I usually do is like a reset. I would reflect like my whole trading the last year, right? I reflect on my trading in last year. I'll do a reflection about, hey, how can I improve, like mindset wise, trading wise. I think even we have been trading 5, 10, 15, 20, even 50 years later, it's good to always reflect, right? What went well and what we could improve the year ahead. And same thing, like I tell myself, like I was like looking at the year ahead, like, hey, this is going to be an interesting year. I think when done right, when positioned myself right, it's going to be an amazing year. But that said, I need to be aware that, hey, because of volatility, I got to survive, right? And so I got to set my expectations right, whereby, all right, risk percentage for sure, I cannot change risk percentage. I think that is something that I'm not sure about you, but when I first started, like I was young kid, aggressive, right?
All of us. The same.
It's like, and I was like, every time I see a good trade, and it's like, this is an opportunity to go right out, right?
What do you mean by 1%, 2%? Nah.
Exactly, like,
Full margin. Yeah.
I would go in
a bit more. Yeah.
A little bit more.
And one more position.
Imagine how much more can I make, right? Yeah, and that's where I think we realized pretty soon enough that it's not going to work in the long run. So, which is why throughout the years, we kind of like I taper my aggressiveness. Like if I'm gonna rate my scale of like 1 to 10, right? I think when I first started trading, I was like 11, aggressive, really aggressive, young kid, right? Right now, I think I'm about maybe 1 to 10. I think I'm about maybe 6.5. So I'm still aggressive, but a lot more calm. Maybe it comes with age, comes with mortgage, comes with family expenses. So it's like, I cannot go all too crazy.
Comes to reality.
I still want to make money, right? But I have to like survive, right? I have to protect my capital. So I think that would be the habits that we need to instill from the start. Like, hey, we are going to get a lot of opportunities this year, right? But we got to protect our capital in order to let it have time to compound. If you have no capital, and your capital keeps dropping, if your equity curves goes up big time because you went all in and then it drops back down because you went all in as well. It goes up, it goes down.
Leverage the more,
right? And then you put in your savings and then it goes up and then it goes down again. Right? But if you done right,
you think only wave in the market. It's not just wave in the market. It's wave in the balance.
Exactly. Your balance will probably be more volatile than the market itself. And because we're always thinking like, hey, I should get in right now. So like, so I think risk has to be standardized. This is a non-negotiable for me. It's sometimes Ezekiel, this is like so good. Why don't we risk more? Like, I did that and I lost a lot of money. So it's like there are opportunities. So like the equity curve can grow, right? Equity can grow not because of just adjusting a risk. Equity curve can grow. It's also how you adjust your risk to reward ratio, because the market is going to be moved. The market is going to move this year, right? The market can go up, the market can go down, right? Whether it goes up, goes down, it's going to be moving, right? We make money when we sell, we make money when we buy, so it really doesn't matter, right? The key is like, are we able to get into the right position when the market starts moving? So sometimes people think, Ezekiel says that I need to get in the right position, right? So I need to jump right in. But then after that, they get fake out. But because they over risk, their account size got bust. When the next opportunity come, maybe that was the real one, because we never really know when is the real move, right?
Yeah.
A lot of times when we are trading, it's like, I think this is the lowest point. I think it's going to go up now. I think this pullback is the real one. It's going to go up now. Then when we enter, and before we enter a little bit more, we realize that is the fake move. Then by the time the real move come, we already got busted.
Yeah, no more equity.
No more. And that move go, and we be like, man, I
knew it. I knew it.
I knew it. I knew it.
Yeah.
Then you be like, did you get in? No, I didn't get in. But I knew it's going to go up.
Yeah.
Exactly.
Yeah.
So it's really also about survival enough that, hey, we are getting in at the right opportunities. We may not know exactly when is the right spot, although we try to with our system, with our strategies, right? The probability increases, but nobody knows for sure that, hey, this is going to be the best spot, right? So which means what? We got to get in consistently in a way, right? When the market starts moving, 1 or 2 or 3 is going to catch it. Some are going to fail, but the ones that run are the ones that are going to make a lot of money and cover the losses, right? So I think this year is like, man, I'm really excited for the year ahead. But the habits wise, I already said, like, it's like, okay, that's it. Discipline is definitely the key, right? Year after year, since I think for the first 5 years, I wasn't that disciplined. My market equity in my capital is like wave. It's not a wave, it's like roller coaster. Big fast up, because like, hey, I reached
it's more,
and then right smack down. So it's like, okay, so
all of us the same.
so like, okay, so now I know I got to taper myself, but I feel that, man, when done right, I'm truly looking forward to 2026.
Entries or exits?
Entries or exits?
Yeah, which one is more important to you? Entering the market at the right spot, or exiting the market when you are wrong, limit your losses, and when you are right, you're trying to maximize things. Which one is more important? How do I survive the market better by having a better entries or a good exits? Which one is better?
I think there is a study for this, like in the study of all the hedge funds, and so everybody can enter around the right, plus minus around the right spot, right? But the ones that are a lot more profitable than the rest is actually due to the exits. I think if it's true for the big boys with the big money or for the hedge funds, right? It is also the true for us. So it's like we see everybody trading, right? We keep plus minus, we will enter, oh, this is the area of value, we can get in, we should buy here. Yes, plus minus, everybody gets in there. But how and where do we get out? I think that is where it makes a lot of difference, right? Some people get in and like, when market goes up a little bit, ooh, I better get out now before it tumbles down. It looks like it's crashing down, right? And then when they go out, we're like, hey, I'm lucky I got out. They only to see market rise, right? So, but there will be times where they go out and then the market dips and they'll be like, yeah, I made the right choice. But because you made the right, so-called the right choice once or twice, you will never have the opportunity to have the market running up with you inside the trade, right? So, like, exits are the one that's going to cover your losses, right?
You make or you lose money from exits.
Yes.
Entries, for sure, you are losing money. That's what. But either that setup is going to, when you lose less, or when you make more. It's from exits.
Exactly. The ability on your exits is going to define your risk to reward ratio. How many losses you make can be covered by getting out right with the right risk to reward ratio, right? As long, so for example, even if you make 5 losses, but if one trade has a right risk to reward ratio where you exited correctly, that can cover your 5 losses itself. So every system should, yes, as much as we have the best entries, I think entries is not the most difficult thing, which is something that most traders, they don't plan. They all plan for the right entries. I need to learn this entry, I need to get out here. But when it's time to exit, they let their emotions take over.
The fear of success and the fear of failure, both.
Yes.
When trading is, when fear of, what I mean by fear of failure is when it's nearing your stop loss, the limit, you tend to go into a lower time frame. So that one is getting further away. But when it's going to hit your TPs, you tend to go into a bigger that one, so that it becomes very near. Yeah, that's what I did last time. Staring at charts, the M5, the M1, looking at charts. Do you remember those early days when we stare at charts?
Yeah.
So, you were talking about risk reward. What is a good ratio?
Risk to reward ratio. Okay. I have a mantra, and my mantra is win big and lose small, right? So, and I truly believe most traders' equity curve will be in a way. I mean, if a good year, if they make like 10-20%, I think most traders will call it a reasonably good year. That would be good with compounding, right? But I told you I was a greedy kid. Maybe now. So I don't think I will be happy with like 10-20%.
Anyone who come to you and say I was perfect, I can do everything, I profit, and run away.
I want 100%, I want 200%, I want 1000%, right? So which is like, okay, like 10-20% is not gonna make it. So and that's where I started to look at trading slightly different. I'm like, okay, how can I increase my equity curve? Like, so there are a few things that we can increase, like the risk percentage we can increase, which I tried. That failed terribly for me. We could increase your number of trades. So you trade more, right? You trade more quantity. Possibly you can make more money. That I tried. I went down, right? I went down the time frame. I went from 4 hour, 1 hour, 30 minute, 15 minute, 1 minute, 5 minute, 1 minute.
So possible tick chart.
Like, whoa, I was having a lot of trades. But my heart was like beating like every time. So yes,
same movement.
the quantity, the trades was a lot more, but I didn't notice that my capital was growing. It's probably going down. So like, okay, so that didn't really work for me. So like, okay, now I have the last thing that I could change. I mean, I could change a lot of things, right? The risk to reward ratio, right? So and that is something that, like, okay, I'm keeping my same risk. Even if I lose, I'm going to lose the same risk percentage. But now I'm looking at trades that have ability for it to run, right? For it to run big time. So like, even though I have like even 50-50% traded, right? 50% loss, 50% win, right? All those wins is going to cover the losses. So right now, my trades, I am taking the best of the best trades. For me, the kind of the best of the best trades would always be trades that have a really, really good risk to reward ratio, right? Yes, I'm still taking reasonably good trades, like 1:1.5, 1:2, 1:3. Those are good, right? But I am always, if there is a trade setup that is like has the maybe an opportunity of going like 1:10 or more, trust me, I'm already looking at it. Like all my charts, I've already marked. This is spot. For this pair, gold is here. For S&P is here. For GBP USD is here. For Bitcoin is there. Like I'm already plotted all the optimal spots whereby if price comes to that spot, man, am I going to go in? Because even though if I lose that trade, I know that if I take those kind of trades 10 out of 10 times, one of them is going to go, and that win is going to cover all my other losses.
So as you mentioned, higher risk reward, normally we will see lower winning percentage.
That's true.
Inversely, right?
That's true. I think you're right to say that, because when you have so-called, when you aim for big, right? When you aim for big, price may not run all the way, right? Price may go, like, let's example, if you aim, let's say you aim 1:10 risk to reward ratio, but price may go 1:3 and then tumble back down, right? And then from a win it became a loss. So yes, you're right. So it's like, okay, you cannot be like, oh, every time I need to aim that big, right? It's like, where can the market run it to? Along the way there will be pullbacks, right? And do you have a strategy if it comes back down for pullback, right? Are you going to get out for break even first, for example, get back in at a pullback, for example? So I think that would be it. I cannot tell you for sure, okay, you got to do this, because everybody is different, right? So it got to be part of your system whereby maybe I'm good at taking 1:3, right? 1:4 risk to reward ratio. Maybe I have the ability to let it run a little bit more. I know that times whereby the market may pull back, it may turn out to be a loss. That's fine. But if it really goes up, I make a win. So my win rate may drop because of that, but my equity will go a lot higher because of that also. Yeah.
So in a nutshell, what one need to do to survive? What risk reward, having having a system, a complete system, of course, entries, exits, how to manage your entries, what to do, basically knowing what to do or what nothing to do when you look at charts.
Yeah.
But basically keeping the discipline.
100%.
That's the hardest part.
100%.
It's easy for us even until now. I started trading when I in 1997. Trading itself 1997.
Okay.
So that's when I started. Even now to keep the discipline is very hard.
It is.
It is very hard.
So don't view for me, like I don't view discipline as discipline. It's like it's like a routine for me now. Like every morning I wake up, same thing, right? Brush my teeth, wash up, go down, have a cup of coffee, eat my breakfast. So trading is like, okay, it's like a checklist, step by step. So like I don't let random things be part of my trading routine anymore. So it's like, even if the market like dips down, like once I said it, is like it. So the moment, I think the key is identity. Like, what is your trading identity, right? Sometimes you say, oh, I'm trying not to revenge trade. I'm trying not to change my risk percentage. But if you say that, hey, I don't change my risk percentage, I don't overtrade, right? I only take the best trades, right? When I get into a trade, when I have an exit plan, I don't adjust my exit plan. When that is your identity, right? Like, I don't think anybody is going to like be able to change your identity, because this is something that is already ingrained with you. So for me, it's really like, okay, I had to believe that first, and then after I believed that, it became my habit, and now it is me. But this is how I trade.
Routine.
Yeah.
What do you do when you wake up and when you sleep at night?
Exactly. But
trading is supposed to be boring. Just
it is
system. But people are making, I mean, a lot of traders, and even I myself sometimes, at times, making it very exciting.
Oh,
you know, there's like, when is it going down?
It can be exciting if you want it to. Like, I think over trading was the killer for me, and I think for you also when we were trading in the earlier years, right? Every time we turn on the chart, we have to trade. If there's a good trade, we trade. If there's a bad trade, we'd be like, man, why am I not trading this? Like, hey, this could actually be a good trade, right? When somebody sends a signal online, like that looks good, maybe I should trade, right?
I remember somebody was telling me last 1 year, I think, about oil not going to zero. There, logically it won't go zero. It went negative. I was in the trade. So things impossible could happen in the market.
For sure. And that's the thing that we learn to filter out. Like along the years, like whatever, there's going to be a lot of different comments and thoughts by different people, analysts by different people, right? I think is the question is, whatever that they are saying, is it part of your trading style, your trading system?
Listen to yourself.
Yes. Your trading system is already built to know that, hey, it can survive all the ups and downs, right? So, and whatever they are saying is not part of your trading system. So you can use it as an understanding for your basis of, maybe this could help to add the probability of you entering into a future trade, but it should not be a reason for you to edit your trade or to jump in your trade, right? Just because somebody says that, oh, now is the best time to buy gold, for example.
The problem is, oil won't go to zero. It went to negative. Never happened before.
But that was a good one, right? I think that was the best time to buy oil. Best time to buy oil.
Whoever was in the trade until now still make money.
But it
went negative. If you're either a cash contract or a continuous contract, you're still in the market. But it shouldn't went zero. It went negative. So anything could happen. But basically, surviving 2026 is all about having planning, keeping to your system, having a realistic trading management, money management. Easier said than done, but you have to strive to, survive it. You have to develop that routine, incorporate that routine in your daily trading.
Which is the perfect thing for us to all plan at the start of the year, right? Because getting the right mindset, getting the right all this right smack develop, like, hey, I got to reach this percentage and a mindset, capital wise and strategy wise, right? And this is something that's gonna follow you for the rest of the year. It's like, and like, hey, along the years there's gonna be a lot of emotions, right? But I'm not gonna let that affect me, right? So that habit itself, and this is me, right? This is now me. It's gonna be stable because, like, along the way, like I said, there's a lot of opportunities, but there's a lot of fakes as well. The question is, when you got wiped out by a fake move in the market, and when the real opportunity comes, are you still there? Right? Do you have enough capital to trade the opportunity, or your account is already gone because you over traded, you over risk, you over leverage, right? So trading is not just about I need to make a lot of money. Trading is also about survival, right? About protecting our capital, right? I think we have learned that the hard way, like because we did not protect our capital because we want to make more money, right? But I think trading, when done right, when we protect our capital, with time, with compounding, our capital will now grow and scale tremendously. So survival is really not about, because I'm afraid of this, afraid of that. Survival is not a weak thing. Survival is actually a very strong thing that every trader, every investor should have as our foundation. Yeah, before we even take a single trade. So the question, like when we take a trade, is like, we should ask ourselves, like, how much or where should I enter? The question is not like where should I enter. The question is like, if I take this trade 100 times, what would be the outcome of it? So if you be like, if I take the same trade 100 times and using that risk percentage, I'm likely to go bust. I'm likely to make a lot of money but eventually go bust. Or I'm likely to, there will be losses but eventually I'm going to win. If that is your answer, then that is the kind of trade that you should take. So that should be the question every time they enter a trade, is like, is this the kind of trade that I should take? If I would enter 100 times, would I enter this trade 100 times, right, and still survive and also do well? I think that would be the key to ask yourself every time you enter a trade.
Okay, Ezekiel, we move on to the next segment of XM Podcast, the rapid fire questions. What was your very first trade and how did it go?
Oh, my very first trade. Wow. I started trading when I was 16 years old, right? So I funded using my part-time money that I work in the supermarket. I funded $500 inside. Very first trade I won. Very first account I blown. Very first trade, like, I got in, I got out, there's no stop loss. I waited a little bit, it went down, but it went up, and I won. Like, that is great, right?
What was stop loss? What was stop loss?
I don't even know what was stop loss. I don't know risk percentage. I don't know stop loss. I don't know risk to reward.
Those are alien words.
Yes. But very first trade I won. That got me hooked. I was like, why is everybody working so hard, right? When making money is like
so easy.
But then we learned the hard way. Then we learned the hard way.
If you could give your beginner self one piece of trading advice, what would it be?
My
stop loss.
Don't be too aggressive, Ezekiel. I'll tell my younger self, calm down. This is a journey, right? This is a journey. It's not like, you're gonna make $1 million in a year and then you'll be a billionaire.
500 ringgit, 1 million. Of course.
It's a skill. You gotta learn it first. You gotta practice it first, and then you develop like any other skill. Like we went to school for how many years, right? Before you became good at anything, right? So it's a skill that we got to develop, and once it's gonna compound, right? It's gonna compound over time itself. So it's like, all right, hold your fire. Good things are gonna come your way. Let it run. The key is not about money, but it's about instilling the right habits, learning the right trading method, creating a right system that suits you personally and not anybody else. I think that would be the key. Yeah.
Finding something that suits you.
100%. 100%.
Don't try to be other people, but be you, a better version of you. I always believe in that. We try to copy all the sifus, all the mentors, but finally, at the end, it's all about you. Finding there's no one technique that works for everyone, but you look for a technique, you develop a technique, you become you. I always believe in that. Okay, Ezekiel, recapping back to what we touched so far, surviving 2026, having the right mindset, developing and following, keeping the discipline, keeping it to you. keeping it to be true to yourself, be true to the system that you are using. Risk reward, of course. You don't have to be right all the time, but be right enough time. Right?
That's right.
And put stop loss. Put stop loss, and also take profit. But because without that, what is risk reward?
Yep.
Yeah. Okay, and that basically wraps up today's episode. Huge thanks to Ezekiel for joining SM Pipcast and sharing his insight on how to survive 2026. If you enjoyed this chat, don't forget to subscribe, leave a review, and follow XM on YouTube and Spotify channel. Thanks for listening, and catch you next on XM Pipcast.